What is going on, everybody, and welcome to another weekly update. And what I'd like to do in these videos, provide you guys some upcoming earnings, some upcoming events to get you prepared for the week ahead. If that sounds like something you're interested in, consider subscribing, as I do also provide a technical analysis on Sundays. So you can watch that video drop tomorrow. And I do also provide a daily pulse on the market on X at Hemi137. So let's get started out, as we have a lot of news to cover today. I am starting out with this article because I want to point out something that I talk about all the time. And when I talk about expectations and what's actually going on and the manipulation that occurs, and if you're in the market long enough and know where to look, you can see a lot of this stuff happening all the time. So as of right now, we did have bank earnings on Friday. We had JP Morgan, we had Wells Fargo, and BlackRock. All did exceptionally well because expectations are low. So, with that being said, I want to dive straight into this article and then start breaking down into some of the other things that we typically normally talk about on the weekly report. So, that being said, Wells Fargo's shares jump after earnings of top Wall Street expectations. You get this headline news, which seems very positive. Then, when you actually scroll down into the details of this report here, if I can find the bottom of it. So when you look down in here, San Francisco-based lender posted 11 billion in net interest income, marking a 11% decrease from the same quarter last year, less than the fact sheet estimated 11.9 billion. So as you can see, there is a massive change in the markdown, the 11% decrease. That's why I'm saying that essentially what goes on with earnings is they are siloed, and rightfully so, because you kind of want to know what's going on with that expectation, but they understand the power of essentially this that particular quarter being siloed, because in the overall grand theme of things, it's still an 11% decrease. And that is a huge problem, but that's not going to stop the stock from shooting up and continuing to push up. And this is why I talk about headline news essentially guides the market. And so when I talk about these things and the manipulation that occur, these are the type of articles that come out all the time, whether it's CNBC or CNN or Fox, whatever the case is. They always put out strategic articles because they know the algorithm is working not off of this 11% decrease, but it's working off of this shares jump after earnings expectations, because expectations are so low. The fact that companies over the past year and a half have essentially hit over, I think it's about 80% is what they were analyzing. It's about like 75 to 80% of all these companies have been beating expectations. And so it's essentially caused the market to be pushing up. And so I just wanted to bring up that article. I don't typically do that, but I wanted to bring that up to kind of prove my point that these articles are out there all the time, and especially around earnings and earning expectations. And then you have CEOs trying to pump stuff, and they feed you a lot of negative information or not true information. You can even call it fake news if you want, whatever the case, but that's what you get all the time, is the manipulation occurs right in front of your eyes and the wordsmithing that occurs. And so these are things that you need to be paying attention to. So with that being said, let's dive into a lot of stuff. We have a lot of things to cover, even though once we go through my recap here, what you'll see is there's a lot of stuff missing, especially as far as events. That's because we are kicking off full-blown earnings mode from this point. And so that's something I want you to keep in mind when we start talking about this. So with that being said, let's go ahead and get started with one of the bigger events. Again, thoughts and prayers go out to those people that are essentially affected by the two massive hurricanes we did have. I think it was Milton over the past week. It's slowly diminished when it started getting closer to land. It was at a Cat 5, and thinking it went down to a Cat 3. So still a lot of devastation. A lot of people are massively affected. So thoughts go out to those people there. But with that being said, again, we had core on Thursday, which was interesting. So year over year, the core, and I've talked about how they've been breaking up these reports to try to make it look better. Your core is still sitting, actually rose 3.3 versus the 3.2 expected. Now, another interesting article I was reading over the past couple of days as well is that if you essentially took into account the rate of inflation over the last year and a half, we are currently, but you've been sitting in a depression since 2022. Just put that in perspective. And something I've been talking about, and a lot of people have felt this massive pressure, yet you have, again, headline news telling you that this is the best economy ever. So just trying to get things a little straight there. But nonetheless, something else we've talked about, inflation. Let me finish inflation with this. Is the year over year, what's essentially happened since the pandemic, prices have still skyrocketed and have hardly budged. They've come down a little, but ultimately over the past 4 years, what you're seeing is that inflation, it's not this 2% inflation. You've had a lot of inflation, especially when you're talking about insurance, HOA fees, a lot of hidden costs, or have massively spiked up. Food prices, they're still looking like well in the double digits, increasing. Yeah, year over year, it looks great. And this is why they started taking out essentially the 2 year average, where they stopped about last year, because you were coming into election year. You had to make things look better. So instead of averaging 2 years, you average the year. And that makes things look a lot better, because again, it would have shown that you've been in a depression for what now, 2 years, just over 2 years now. And so global depression, we've talked about this, and this is why this was the most anticipated recession, yet somehow the market was propped up to start pushing up over the past year. Because again, I know all elections, they say that they're important, but this one in particular was very important. And for other reasons, we're not going to discuss here. But with that being said, you have to understand there's a lot of manipulation that just normally occurs. And that, again, leading into this, they had to make sure that things were lined up. Their ducks had to be lined up with the talking points that they had. And again, you don't want to lose those talking points. You don't want to lose the markets at all-time highs, economic numbers, all those particular things, data sets when it comes to unemployment. Like, you want all those things to shine when you are going into an election year. And so there is a sense of manipulation, but we haven't seen this level of essentially manipulation occur, and massively at that, because essentially you've been in a depression for 2 years. So that being said, I've talked about China all the time. China is providing another stimulus package of 325 billion. So they just had 500 billion that was printed, I want to say it was about 2 months ago at this point. That temporarily pushed up the market, didn't help. The market started to crash in an overnight session. I believe it dropped like 10 to 12% on the index. And then essentially they started cutting rates at a rapid pace. So then they had this historical like uptick in the market for a couple of days. It was about a week. Then they shut down the market for a week, only for it to come back online. And then things just started rapidly selling off again, to the point. So this weekend, they just before coming on here, they approved another 325 billion. So again, massive free fall, and all they're doing is turning on the printers to try to save it, because that's all they know how to do. And we are on the cusp of that, and that's why I keep emphasizing next year, after the election, when you're not trying to buy a vote, this is what's going to happen to us. We're going to have our own level of correction that China's having, and you see it overseas before it happens here. This is historically been proven that what happens overseas, because again, you have to understand we're very much in sync, because there's a lot of trade that goes on over the borders. You can only silo yourself so much before again, not being affected. So again, very big news coming out of China, and that's what's extremely important. Now, over this past week, we've also heard that 7-Eleven is closing 444 stores. Now, that is shocking, because in such a strong economy, why would 7-Eleven be closing? There's like a 7-Eleven on every corner, so 44 or 444 100. It really doesn't seem that bad when you're talking about 7-Eleven, but that is a lot of stores. And the fact that it's always been a very strong convenience store, and the fact that they're closing so many of them is shocking. And especially when, again, you're in the golden age of the economy, apparently, which again is false, right? It's not true. This is why you can't listen to fake media or news media because of what's actually going on. Because again, the wordsmithing going on, and a lot of them are in sync. And this is why a lot of people just haven't been listening to mainstream media anymore, and they're finding other sources to get information, at least to get another perspective on what's going on, because what is being said and what they're actually feeling are two completely different things. And so I got another article here I'm going to go over when I start talking about Prime America. But so with that being said, again, very shocking that 7-Eleven closing, again, feeding the narrative that things aren't what is being represented, that things are very much in bad shape. BA also slashes another 17,000 jobs, right? The job uptick is continuing to accelerate, and we're seeing that, and we've seen that more so over the past couple of months, despite this new people have this massive job report that we had last Friday, where we all of a sudden beat expectations and blew it out of the water, all primarily, again, manipulated by government jobs and massive government jobs. And that's really the only reason why that report was up, or else it would have been way down below expectations. And so, again, you have to pay attention to the details as opposed to what this wordsmithing of headline news is doing that actually affects the algorithm. The algorithm, again, doesn't take into account revisions and everything else that's been going on. So again, BA slashing massive jobs. And then you have JP Morgan, which JD Diamond has been really vocal over the past couple of weeks about us not achieving a soft landing, and that things are looking really, really bad in the upcoming future. And then all of a sudden, again, you're under 30 days from the election, and you have JP Morgan stating the U.S. economy has achieved a soft landing. Again, back to the soft landing, the confusion continues. And so people are like, well, what is it? Is it a soft landing, or are we going to achieve a hard landing? You're not going to know that you've been in a depression till after the election, until these scheduled things. They want to try to ease and not draw panic in essentially the market. And to be able to do that, you have to understand, again, they are spending $1 trillion every 90 days. That's a massive amount of money to keep this thing propped up, to keep people believing that things are in a great state when in fact they are not at all. Why are so many bankruptcies occurring? Why are people's the credit cards running through the roof and their savings rates plummeting, despite this last report that came out like 2 weeks ago that was kind of under the radar, that no, we have apparently I don't remember how many billions of dollars, but apparently people still have all this massive billions of dollars that isn't being reported, and the people are still spending and still great. And again, they're all misleading information, because that's not what essentially the market is telling us. And this is why I do this channel, to point these things out, because it's blatantly obvious, especially now, it's even more so obvious what's actually going on. Again, yes, the market will be propped up. This is why you can't just go off of macroeconomics, right? Even the stuff I talk about, is the market will still push up, again, because of what's based off of headline news. This is why you need to be in tune to headline news, but understand the difference between the reality of the situation, this perspective, utopic view that I talk about all the time. Because again, if they turn on the money printers, you want to be in the market, because the market's going to go up. But on the same token, you have to know when your normal cycles are, because essentially at the time is when news starts surfacing that essentially takes it down. So when I talk about strategic planning of like earnings and stuff like that, events, right, you have to kind of get an idea where that could drop. Now, there are events that occur where you don't typically see it, but for majority of the time, you can see a lot of the gray swans that could potentially play out. And so that's why we mention them on here. So with that being said, soft landing, so much so that Prime America, this is a big one I've been watching. Now, Prime America, again, they are not believing in what's going on with the numbers being reported. They have done their own survey on the middle class, because they've seen a reduction in essentially middle class. And they're coming out and saying that a lot of this stuff is not true, that their delinquency rates are high. So a lot of things we talk about, they are proving that that's the case, that people aren't as or the economy isn't as healthy as what is being presented to everybody. And so a big survey came out from them discussing that in the middle class and where they're currently sitting at. And people believe that inflation is still their number one concern, despite what is being reported. Again, because if you go back 4 years, right? And prices are much higher, double digit inflation still on a lot of everyday items that people need, especially now. Like, you are required to have insurance on your home, especially if you don't put a lot of money down on your house. And then HOA fees are high, and you have to have medical care now. Medical care is ridiculously expensive. And so these are the problems, is that, again, despite what is the talking heads are saying, people are just in horrible condition. And I talked about last week, I believe, I've been talking, at least I know I've been talking on X about this, but, you know, essentially, not just the unemployment rates have been coming, or been skyrocketing. We're seeing it to uptick a lot over the past couple months, actually, so much so that we've had these massive revisions going into Jackson Hole. But ultimately, understand too that essentially people are becoming homeless. The odds of, or the rate at which people are becoming homeless is skyrocketing. And if you look at a lot of these major cities, you're seeing all these essentially like drugged out people that are, or homeless people right now, um, with the fentanyl that's currently going on, that currently doesn't exist, and all these other things, and trying to cover that up and understand that if you looked around and essentially unplugged from mainstream media and started looking at what's actually going on, you are in a depression, and it's been going on for a very long time. So by definition, a depression is a recession that has gone on for longer than 6 months. And if you've been in a recession for 2 years, taking into account of inflation, you've been in a depression for a year and a half right now, continuing to get worse, at least until next year. Once there is a change in presidency, then at that point they're no longer trying to fight for your vote. So at that point, then it's different. Then they can offload everything and then try to recover everything over the next 4 years, which is going to take a long process. It's not going to be a very smooth process. So again, a lot of really, really big news is coming out this week that you really need to be paying attention to. And again, also why I brought up that article um, earlier when I first started out the video here today, because I was trying to show you, pinpoint what the headline news is, and then in the details it shows you just in that article alone that, there was 11% decrease in essentially profitability for these companies, and this is what happens all the time. Upcoming events, I didn't put anything on here. I left this blank because there really isn't a lot. It's more so all centered around earnings, because earnings is going to be a big. Now, I believe the Super Bowl week will be next week for earnings. This week, we'll start get a taste of a lot of finishing up with a lot of banks, which we're going to get over. We're going to go over the calendar here in a second. But it's going to give us good insight into how major things are going to come. So over the next couple of weeks, you're going to be bombarded with information, and you are in the last couple weeks of the elections. So you're going to continue to get more and more and more information, and you're going to miss a lot of the details, and it can be overwhelming. But it's important to pay attention to what's going on, and if you can look past the negative news, and try to take advantage of what's currently going on, I highly suggest you try to do that if you can. Understandably, if you can't, but again, this is how it differentiates you from the rest of the pack, right? Is to try to be able to push these through these things, and try to have some sort of mental break, because a lot of it can be a lot at the same time as well. But with that being said, as far as what we've got on the agenda for the remainder of the year, we have monetary policy on the 7th. That will be important. It's been weighing back and forth between a 25 and a 50. With the strong jobs numbers, it kind of threw that off a little bit, but people are starting to lean heavily back towards a 50-point basis move in November. So we'll have to see how that does play out. Again, this is why I say you can't go off of projections, especially too long term. Even just the next one, we were too far out for November to really dictate what that was going to look like. Once we get earnings and everything, that number I think can fluctuate a lot more. And so, like I said, once that's going to come right after essentially the election. So essentially, once the election's done, then it doesn't matter at that point. At that point, there's no point holding back. You can about everything that's currently going on. So then upcoming earnings, like I said, we'll go over the weekly calendar here in a second and look and see what we're looking at. Expected moves. Now, this has dropped way down. It was the end of the world last week. Again, you had the core CPI. it's actually been coming down essentially since monetary policy. Monetary policy, I believe, is like 110 or something like that, and it's dropped way down to 82. Your average is 62, so it's a little bit higher than normal because you still have a lot of big earnings, but we're not in this essentially the Super Bowl week. You'll see that expected move priced more into the individual stocks as opposed to the index. So keep that in mind. JP Morgan was doubled from what it was. It's typically 4, so it is a little bit higher than normal. Boeing is a little bit higher. This has kind of moved up. Its averages now roughly around 7, 8 now, where before it was a little bit, the average I think used to be around 5. So this is kind of like slowly averaged to a higher range with all the bad news coming out with it. And then Tesla has earnings coming up here. Is actually moved out of this week, which was been one of the front runners as far as getting expectations. But now that it's kind of solidifying itself and doing a little bit better, they are moving it back up into the earnings, essentially the Super Bowl week of earnings. So, and it's been swapped out with Netflix now. So it'll be interesting to watch and see what happens there. But those are their expected moves. So expecting more bigger moves in individual stocks this week. So let's take a look at our calendars. So this is really what we're here for. This is what we're all about. This is what's important. We have to really, this is where at this point we are starting to cut. I've talked about this already. We are starting to pivot, but it will take time. And so there are certain particular earnings you need to start watching. Now is probably too soon. But get in another quarter or two, and we'll see how much impact these cuts are actually making. Again, it takes about 6 months to really see some sort of impact. So I'm really not, to start seeing these things start flipping. Well, you probably won't see that for another, 6 months. In 6 months, you could probably start seeing a lot of these earnings start flipping. Expect things to get a lot worse over the next 3 months, 3 to 6 months. Things are going to get a lot worse. So do expect that. And then ultimately understand, again, we might hit this massive disinflation like we're seeing in China, to where they're doing everything that they can because their markets are just crumbling and they're essentially printing money, cutting rates, whatever they have to do. They are pulling out all the stops. And so we will see some form of that here going into the new year. So being said, and we'll like I said, we'll pick out those particular earnings once we get that far. So do keep that in mind. And this is why this is going to be important when you're getting this earnings, because this is just the cusp of it, and it will get worse. Expect the next quarter, the next 4 quarters to be really bad. So and you'll probably start really seeing it bad here next quarter going into Christmas. So. But it won't be reported into Q1 of next year. So with that being said, okay, on Tuesday, we have Citibank, United Health Group, and Bank of America will be big ones to watch. Charles Schwab, Goldman Sachs, PNC, State Street, all these banks that are reporting Tuesday morning will be extremely important. Now, they did have these reporting on Monday. The fact they shifted it to Tuesday is interesting, as like I said, the strategic placement is going to be more important, especially in this particular earnings cycle, because you have the election in just weeks away. But ultimately understand, again, they will try to shield as much information as they can until after the fact or until they have to actually report it. Not that that's not fraudulent or nothing, but they'll do their best. So nonetheless, again, they're trying to shift this over a little bit more. The more days you have to delay is beneficial for reporting. So just keep that in mind. So this is why you see the shift of a lot of different things. But Tuesday close, United will be interesting just to watch. Travel. Again, these earnings, the bank earnings can have a lot of weight in the market, but that's why you got a lot of the front runners on Friday. These ones can still have a big impact on the market, so do keep that in mind. As banks obviously hold up the whole infrastructure, so banks go, that's going to be a huge problem. So that's why it's always important to be watching that. But like I said, this earnings on Tuesday, United will be interesting to see kind of the pulse of where the consumer is in travel. This is why I bring these particular ones up. It would be a good one to keep watching moving forward, and kind of understand when the consumer starts coming back stronger. And again, I wouldn't expect that until start really looking like 6 months out from now to really start seeing things pivot in a more positive light. But a lot of stuff can happen in 6 months, so that's why you need to really keep that in mind. ASML is going to be extremely important to give us a taste of what's going on with essentially the chip sector and AI and where that stands. That could be really, really impactful since that is pretty much what's pushed up the market. We also do have TSMC semiconductors. This is the same category. This holds a lot of weight and what's going to impact with Nvidia moving forward as well. So that will be a big um, kind of tail into what could be potentially coming over the next couple of weeks. Morgan Stanley on Wednesday morning will be a big one as well. A lot of banks reporting. So that's Wednesday could be a big concern here. So you really want to be watching Wednesday morning. Wednesday afternoon, none of these. Again, a lot more. Discover will be interesting to watch. That's one of the first ones that have when it comes to credit cards that you're seeing massive delinquency rates on or delinquencies that people just aren't or essentially will file bankruptcy ahead of time because they just can't pay their bills anymore. And so essentially they go into you can't essentially put in a claim anymore or go after people for money at that point once they file for bankruptcy. So it's an interesting one to really watch is that's one of the first credit cards to start turning over before a lot of these other bigger ones like Capital One and everything else start turning over as well. Thursday morning, like I said, TSMC will be extremely important on the chip plays in how that may turn out. This is a good idea of what you're going to expect from this. So again, you have a lot of big chip plays this week. And then none of these. You get some more banks mixed in here, which is which is going to be important. I think not this particular quarter, but the next couple quarters, banks I don't think are going to get bailed out anymore after that point. And at that point, then you're going to start seeing a lot of these banks collapse. These smaller banks are going to start collapsing at that point. Again, everything's a facade until after the election, and then after the election, and people have casted their votes, then it's a different story. Then Nflx is going to be probably one of the biggest earnings this week, aside from TSMC. So Thursday will be a big day in general. So it'll be interesting to watch and see. Again, they are removing the subscriber count, which is great, which would give us great insight into where the consumer is at. I've always talked about having cheap entertainment, and that was a good sediment to that on the subscriber count where people were at. And so now that they're removing that, you can't really tell what that really looks like. You're going to have to kind of assume what it's going to look like. So every time, again, there's people are forced to be locked down, whatever the case, then you can expect at Netflix to run up. Or if essentially the economy is doing well, Netflix subscriptions are going to go down. So this is going to be one you're going to have to watch. If essentially their earnings start massively missing, which will be coming in the next couple of months, then that's concerned. That will start showing that there's a shift into people are starting to have more money, so they don't want to be at home anymore. Maybe they're purchasing more travel. And you got travelers on Thursday morning as well, which will be important. And so you start seeing a shift from here, something like Travelers or United and some of these other sectors as well, which you're not seeing. So again, in a very strong economy, you shouldn't expect Netflix to be doing so hot, right? So that's something you keep in mind. So especially coming out of the pandemic, people still wanted to be doing traveling. That kind of just re-emphasized all that with all the lockdowns. So again, there's still some good earnings, a lot of bank earnings Thursday, and then Friday. Procter and Gamble would probably be going. Ally, a lot more banks to be paying attention to. So the theme of this week is banks, but again, you'll have a smattering of chips and travel, and again, just the consumer sentiment with Netflix is really, really important. That's why that one's so big. And so yes, it's going to be our first real take on everything going into, and again, then you're going to start getting Microsoft and Amazon and all those, and expecting all those to do really bad. Again, they have done layoffs. This is something I want to keep in mind. Again, they have done layoffs help initially. They delay true numbers. You've gone a year, things have been delayed. You're starting to see an uptick in more layoffs. again, a lot of these companies are running off of skeleton crews, and that is going to slowly be reflected here in the next couple earnings moving forward. They kind of timed it all out to where, again, they knew that if once they started massively cutting people on employment, then that would help them survive and remain profitable for at least a while. But now you're starting to see where you can't do that anymore, that it's going to start expanding and getting a lot worse from this point. So if you made it this far, I do appreciate you. Go ahead and drop a like. And until next time, I will see you guys later.